Hello and welcome. It's David and Brent again. It's January 17th, Friday. Following up with some of the key items that we've been thinking about this week. We have three topics started up here. Phase one trade deal this week, USMCA. And we have a new question in the Forecast Network to talk about. In this week's email that's going to go out, the headline is "When it rains, it pours." And it seemed like this week we had a lot of things that have been simmering on the back burner for a few weeks and months, and all of a sudden we got some clarity. So the first one here, phase one trade deal was signed. As Brent had a better score for this than I did, as we following up from last week, so he would have had a better score. But we did see that signing in the White House between President Trump and their lead negotiator. So Brent, what was your observations from that? What's your how should we think about that as we move forward?
Well, I think first, the signing of that trade deal is unequivocally positive in my mind. I don't really, I don't really care at the end of the day what the numbers are in the trade deal or any of that stuff, as much as I am really happy to see trade relations improving between our two countries. And as you think about it, I mean, China is just such a big market, and it's growing still. And we need access to that market. And this appears to at least have improved that greatly. Excuse me, David.
You gonna make it today?
So, yeah, it's so I was happy that it got signed. I tried to watch it and couldn't get through the 40 minutes of self-congratulation that was going on. That was kind of bizarre, actually. But I guess everybody was taking a victory lap.
I can't agree with you more. This is the first big positive piece of information that's came out of the China trade war. It is a step in the right direction. There's a lot of questions about the magnitude and the impacts. I don't think we should. I think there's going to be a lot of confusion stirred up as Twitter blew up right after it happened about what commodities are included, what commodities are not included, what's the actual base level that they're counting from. The trade deal itself was an increase, a year one increase and a year two increase over the base level. So there's argument as to what the actual base level is. I think it'd be very easy to confuse yourself and overwhelm your thinking if you try to jump down the rabbit hole and pull out all the small nuances. I think it's a positive story. I think, we have a question in the Forecast Network thinking about the $35 billion in annual purchases, the probability of that happening in 2020. I think that's a great question to stay focused on. I think this piece of information increases the probability of us reaching that mark. It's not saying we're going to get there definitely, but I think it increases. It's a positive development.
Yeah, and I almost wonder whether we shouldn't add another one at a lower level, exceeding, maybe the 2017 baseline, because at the end of the day, we just saw trade with China dry up, and I looked on Twitter, and everybody's losing their mind over, well, this is never going to happen, and they're going to cheat, and they're not going to follow through, and all this stuff, and yeah, probably not. I mean, but at the same time, you got to kind of be at least pleased that we're trying to get out of this mess. Now, you can really legitimately ask whether it was worth it. I mean, we spent 2 years of no trade to kind of get back to getting on probably a baseline trend that we were going to get to anyway. If you look at that article I wrote a couple of weeks ago, basically said we're going to get to 40 billion at some point anyway, if we can just trade with them. And I think that's what we need to focus on. And, I know the market was down and people are, well, I think part of that is this was the worst kept secret in Washington, right? I mean, everybody knew that we were probably going to do this deal, and they had some clue as to what was in it. So when it wasn't real specific, I think the market was probably a little disappointed. But I think over, take a longer view on it, it's got to be good news.
So yeah, I think we were talking beforehand, some ideas to keep in mind. How can we think about this probability of more than $35 billion in purchases for 2020? I plan to go back and look at monthly purchases of China, looking at the seasonality of that by month by month. My initial guess is that we're going to get to the fall harvest when soybeans, or China usually comes in and buys a lot of U.S. soybeans to really see the needle move. I guess another way of saying this is the last few months of the year is probably whenever we tip over that 35 billion mark or not. Sort of a lot of the weight of those purchases are in the back of the calendar year. I don't know. That's my thought. So we're going to look at the data, see what that seasonality looks like. It's one of the things that we can provide. We're going to provide regular updates on is as that monthly data comes up, are we, exceeding those base levels in the past? So we can track and monitor that over time. And one of the things we were talking. Go ahead, Brent.
I was just going to say, one of the things we were chatting about beforehand is just think about take soybeans, which were roughly half of our exports to China in 2017. There's somewhere in the neighborhood of 2.1 billion bushels in 2017. In 18, the 2.13 was our total soybean exports.
All exports around the world.
All exports of soybeans, 2.13 billion in 2017. 2018, we dropped to 1.75, and 19 sitting right in that neighborhood too. So we lost about 350 million bushels of soybean exports from 17. If we could gain that back, we're sitting on ending stocks of 450 million, as you told me. So, that changes the tone, I think, in the soybean market considerably. And that's what I think is important to keep in mind is, don't get caught up in the details of whether China's meeting their quote or, their commitment on a day-to-day basis. Let's just think about the longer term.
Yeah. And, your graph from we talked about last week, that trajectory in China's overall increase in ag purchases over the last 20 years had an annualized average rate of increase of $9 billion a year. We're roughly 20% of that, or almost $2 billion a year. And this trade deal gets us back as part of that growth, part of that China story. I think it's positive. The other thing to keep in mind is how is it going to impact, for a lot of listeners, how's it going to impact the farm level budgets, whether you're a producer or somebody who works with producers, and thinking about, okay, are we going to start sending more soybeans? How does that work its way through the commodity markets? And so I think the temptation here, and there's a lot of articles, you don't have to go very far on the media. You don't have to go very far down on Twitter to find some sort of individuals who have some very clever ways of kind of finding gotchas in the deal. And again, I think that's just setting yourself up for disappointment down the road if you got to focus on the big picture.
Good. The other thing, I think the one headwind you've got in the soybean deal is the whole African swine fever issue, and we just don't know ultimately what that's going to do to demand. But that's the other one that came. I've been doing a lot of talks recently, and that one, has come up quite a bit. Trying to remind people, watch for the spread of African swine fever, and particularly into a country that imports corn to feed their pigs. It would really hit the corn market too.
And just a side note, we actually have an article on the Forecast Network platform that's posting today that takes a look at some of the efforts that the U.S. government, the Canadian government are putting in place to keep African swine fever out of the U.S. We have a question about that in the Forecast Network. It's really interesting to think about how African swine fever might spread. One of the ways is feed that's being imported or feed ingredients. And so take a look at that article. I think Brent summarized that well. There's, the positive story here is the trade war is over, or we're heading in the right direction. The African swine fever hasn't resolved itself, and so that is another issue to keep in mind. Another big development this week, Brent, I believe yesterday, the 16th, the Senate, right before they went into the impeachment hearings and they got sworn in for that, they ratified the House's version of USMCA. So now that will move to the president, who's expected to sign that. But our question to the Forecast Network was, will U.S. Congress ratify, both houses ratify USMCA? We asked it before the end of the year. That question closed. They didn't do it before the end of the year, but they did it this week. So another piece of positive news coming out of that.
Yeah. USMCA, honestly, for most of us, it's kind of back to NAFTA 2.0 or whatever. I mean, I think the marginal improvement, there are probably some good things in there, but pretty small, but at least they got it done.
I actually heard a speaker earlier this week in my travels, and they went through sort of the changes, and it was the USDA's summary. And for corn and soybeans especially, was the verge was the U.S. will maintain its trade situation. And for wheat, it was the U.S. maintains its trade situation with some improvements for producers who are growing wheat along the Canadian border. They have some more access to that market. But yeah, for the majority of us, the corn, soybean, wheat story is mostly unchanged. There's a lot going in around labor and auto manufacturing. I think the improvement here for the farm economy is the uncertainty of that starting to be removed. It wasn't necessarily a huge improvement. We just avoided a bad outcome. If you're really interested in this, it's worth noting that Canada actually hasn't passed it yet. So there's Mexico has, the U.S. has, and now there's Canada. Another example of how when you start to peer into the abyss, you start to learn a whole lot about how these trade deals get navigated through. It's not as clear cut as maybe you would think at the surface, just sort of reading headlines. It's not as clear as the USMCA actually isn't in, even once President Trump signs it, it is not valid until Canada goes through its ratification process.
Yeah, it's a big can of worms. You had something else about another policy thing too.
Yep, another policy issue. New question of the Forecast Network. It goes around the ag modernization of the workforce. A lot of effort's been going through Congress the last year or so. The House actually passed a bill before the end of the year that would modernize the H-2A guest worker rules, allowing for year-round visas, and provide a legal status pathway for the current workforce. And so, it's interesting. I think this is one of those really big pieces of legislation that's really important to several sectors of the ag economy. And it sort of passed very quietly in the House. It was one of the first bills for modernization of the ag workforce that we've seen in a long time. It was a bipartisan effort to get it passed. It passed the House. Now it's moving to the Senate. Our question asked, will the president sign into law before July 30th, this legislation? So it needs to, the Senate will need to pass a version of it. The president will need to sign off on that. But it's just sort of interesting. It's interesting development. It's a very important piece of legislation that hasn't got a lot of fanfare. Maybe that's actually helping it out in today's political climate. But of all the noise that's out there around impeachment and trade deals and USMCA, this is a piece of legislation that went through bipartisan support. We actually have an article posted that gives a good background of the challenges and what's at stake and how this came together. So take a look at that. It's not something that I think about on a regular basis, but I think it's a very important news item. It's a policy issue to keep on the radar screen.
Yeah, I mean, I've used the H-2A program, and it would be nice if some of the, I think that bill sounds like it has some features that would be pretty nice. So we'll just have to watch it and see what happens. I know more and more agribusinesses are using H-2A workers as well. So becoming a more and more popular kind of workforce. What about impeachment? Is there anything, does it mean anything for the agricultural economy, I guess, is the big question. And then kind of the other question is, does it go anywhere or not? I have my views, but I'll throw it to you first.
I think the frustrating piece of this, the direct impacts to ag seem very limited, but the indirect impacts are we're gobbling up the bandwidth of Congress. Specifically, I mean, we saw it sort of clogged up the House for the last few months of 2019. It looks like it's going to clog up whatever the Senate's going to be working on. It's kind of interesting to actually look at some of the rules. I've casually been reading them. The Chief Justice of the Supreme Court actually presides over the Senate during this hearing. And so it's sort of not an uncharted territory, but it's a territory we've only been in once every 20 or 25 years. I think the whole thing is it creates a lot of distraction. So the Senate is going to be distracted. All efforts are going to be, so think about this workforce modernization. Work on that's not going to be getting done. I think we talked about this a few weeks ago. USMCA slipped in right before they started the trial. Otherwise, it was going to get pushed to the back burner. I think the other indirect side of this is it's going to boil over into the election cycle. It's going to be part of this entire election cycle that we're going to be focused on for the rest of 2020. So I think it's a lot of noise, but I'm not sure it's going to have a huge impact other than just distraction.
Yeah, I think that's pretty much it. I think the likelihood of that going anywhere is very, very small. It's mostly political theater at this point, I think, but you never know. I mean, when you open up these cans of worms, the strange things can happen. So
I think that's a lot of the tactic that we've seen over the last month or so is open the can of worms and leave it open as long as possible to see what might surface. So the longer this is open, the more issues or challenges or pieces of information that are going to be revealed by like you. I think it's a low probability event of them passing to remove him from. So I guess the House has voted to impeach. Now the question is, does the Senate? How does the Senate proceed? With the removal from office, I think it's a low probability event. Correct me if I'm wrong, but we've actually never voted to remove a president from office, correct?
I think that's correct. Yeah.
So, I mean, history would say we've sort of never done this, but low probability event.
Richard Nixon probably would have been removed, but he quit before. I think that's the only one. So anyway, and it's very unlikely that happens this time too. But what else? Anything else? Or
what questions have you been updating? What have you been focused on? Does the trade war change your thoughts with respect to an MFP payment for 2020? Does the information this week?
Yeah, I have a very low probability, like 5 or 10%, I think, on getting another MFP payment, a new one. I think there's I haven't put a forecast to the last round of MFP, but I think it's unlikely we'll get another one. But you never know with politicians and election years, but I think it's unlikely. I wouldn't count on it for sure. So that's that. I guess that is there. As terms of other questions, the one that I'm really going to be watching closely is related to where planting intentions might go, and because I think that, I've been pretty optimistic. I think my probability above 425 corn is somewhere around 80%. And I think if we get a lot more than 96 million acres, then I just think it takes a lot of the potential topside off of that corn market. So that's one I'm paying a lot of attention to.
Another piece of data that's going to be a part of that, to what happened with winter wheat plantings. The USDA has a winter wheat and canola seedings report that comes out. I think it's this month. I have to go look that up exactly, but that comes out very soon. There is a question about that in the Forecast Network, so we'll be watching that as well. Winter wheat's an important one. And you know, the question that's I've been actually backing away from, I did a big adjustment lower. Fertilizer prices. Tracking fertilizer prices out of Illinois this week. The most recent data came out, and I'll include a link to it. Anhydrous ammonia is the price point that we're looking at. We're asking, will it get over $600 a ton? It was there for most of the spring in 2019, and it hasn't turned higher. I expected it would turn higher by now, but it's staying right around that $500 per ton or lower. And so it's interesting to think about the idea of 94, 5, 6 million acres of corn. The fertilizer market hasn't kicked back higher. So to recap, last spring it was around 600 plus a ton. It dropped into the summer around 500, which is where it was the previous fall, but it hasn't really moved from there. So I back down my probability on that. It could definitely be a gift to corn producers as they're thinking about their budgets. But it's a big question for the planting season, so keep that in mind.
Yeah, and I just read Illinois has some crop budgets out just recently, and they were kind of making the argument for, returns to be lower to soybeans, which is a little bit different than the case usually. A lot of times that data shows soybeans to be pretty attractive. And so that got me to thinking a little bit about, where we were at on corn acres. So it's going to be really important. Now, yesterday when the corn market dropped 10 cents, I don't think beans moved very much. So we're going to have to watch that price ratio a lot.
And we'll discuss this in a later episode in more detail, but one of the things that you and I were looking at for a different project earlier this month is how much that corn to soybean price ratio has moved over the last 6 months. When we were talking about 100 million acres of corn, that price ratio was around 2.2. 2.35 is sort of a historic average. We are close to 2.3 in October. Now we're above 2.4. And so it's one of those tricky situations where soybeans, the ratio is favoring soybeans at the moment, but it's not nearly as strong as it was when we had 50-50 split between corn and soybean acres. And so soybeans are going to be less appealing than they were before the trade war, more appealing than history. So how do we sort of balance that out? Our back of the envelope calculations are suggesting that soybeans bought somewhere around 3.5 to 4 million acres of production over the last few months. And so we got to watch that price ratio as soybeans move through the next few months, especially if China comes and makes some purchases or commitments for purchases. There's always a lot of attention around plantings. This year will be even more attention. I think the numbers are going to be surprising, whatever they become, but we're going to be surprised whatever the final number is, because there's just a lot of moving pieces and a lot of uncertainty about them.
You bet.
All right. Well, that's all I have. Anything from your end, Brent?
No, I think we covered most of it. So,
all right. Well, good luck updating your forecast, and we'll be back next week with another summary of what we're thinking about. Thanks a lot.
Thank you.